Hello. I will provide some explanations that are a continuation of the main topic discussed in our previous videos, aimed at individuals and families living in or planning to live in America, as well as those conducting investment research.
According to the bank's desired 36% average, if you are paying 15% of your total monthly income towards debt, it means that around 21% of your gross monthly income should be allocated for a mortgage payment, property tax, and insurance. If 21% of your $5,000 gross monthly income is $1,050, it would mean you can afford a mortgage credit of $1,050. This ratio serves as a suitability criterion for you. Banks or mortgage broker companies? In the United States, 68% of the total one-unit mortgage loans have been provided by mortgage broker companies, while the remaining 32% have been offered by banks. People generally think they can get better rates from banks, but mortgage broker companies can also offer competitive rates. However, banks might be less flexible than broker companies due to their more defined terms. Can I get a home loan with an ITIN tax number? As mentioned, a mortgage home loan is primarily offered to American citizens and individuals with a Social Security number, SSN. However, if you have an individual taxpayer identification number, ITIN, some mortgage institutions and broker companies can provide mortgage financing. Difference in interest rates between SSN and ITIN? In general, a person with an SSN can borrow at about half a percentage point more in annual interest compared to someone with an ITIN. For example, for a $300,000 loan, if you don't have an SSN, you might have to pay an extra $1,500 in annual interest. Additionally, those without an SSN but with an ITIN are usually expected to make at least a 20% down payment. Can I get a mortgage without an SSN or ITIN? Individuals without an SSN or ITIN but with the right to reside in the United States can apply for a mortgage loan. Generally, when American citizenship or an SSN is absent, a 20% down payment is usually required. When the down payment is less than 20%, additional expenses like mortgage insurance can be incurred. Critical points in mortgage loan applications. Stop buying things you don't deserve. The main reasons borrowers pay higher interest rates or get rejected for mortgage applications are having a high debt-to-income ratio or low credit scores. If you avoid buying things you don't need, you'll have zero debt. Zero debt or at least manageable debt that can be paid on time will result in a high credit score. Strive to earn more money. If your credit terms don't match, the only alternative is to earn more money to reduce your debt-to-income ratio. Opportunities for additional income are unlimited in the U.S. Moreover, no one needs to be proud of earning only the minimum wage. Research the most advantageous mortgage company. The easiest way to get real competitive offers is to research the mortgage market through platforms like LendingTree, Bankrate, or Quicken Loans and request offers via email. We have online programs that can identify banks and lenders that can offer the best rates. If you receive a good offer, you can ask your current bank to compare it with these offers. This competition will benefit you. Promise to conduct other financial transactions with the same banks. Banks prefer to do business with long-term customers. Each banker's goal is to make sales with as many products as possible. Showing interest in areas such as bank savings accounts, CDs, brokerage accounts, mortgages, HELOCs, unsecured loans, etc., can work to your advantage. You should discuss your education, career path, expectations, and similar topics so that the bank believes in your future. Also, try to improve your emotional intelligence. The more they like you, the better service you'll receive. The reason for a housing crisis was that too many people took on too much debt. People's incomes suddenly disappeared, and they couldn't afford their mortgages. For such potential difficult situations, I recommend everyone to have at least 20% additional income or a 10% cushion of asset-to-income ratio in the form of liquid securities. You should evaluate attractive investment opportunities in your surroundings for this. If you want the lowest interest rate, you must work hard or make long-term profitable investments. This should be noted by most people. Transferring your purchased credits and home deeds to a trust account will convert your interest-based transactions into purchase sale, murabaha, and leasing, ijara leaseback, transactions, as we explained in our previous video. Some of the main types of mortgages applied in the U.S. are as follows. Rare credit for bank sheets, suitable for self-employed individuals. Review of 12 or 24 months of business or personal bank account transactions. No need for U.S. tax returns. Applicable for all residential and commercial property purchases and refinances. You can get credit up to 90% of the property value. 1 year, rare credit for tax returns, suitable for self-employed individuals. Average of 2 years of taxed income is considered based on a 1-year tax return. FICO credit score should be 680 or higher. Lower interest rates are applied. Cash flow loans, investment property loan. No income requirement or need for U.S. work and employment conditions. No need for tax returns. FICO credit score should be 640 or higher. Bridge loans, investment property loan. No down payment required, applied for fix and flip property purchases. Loan processing is completed within 7 days. Loan amount is valid between $250,000 and $20 million. Attractive for multifamily, 1 to 4, homes with rental value, commercial properties, offices, industrial, and land purchases.
Thank you for listening patiently. You can hear detailed explanations about this topic in our other videos. Feel free to write down your questions.